As a reminder, the Megatrends series aims to throw light on the structural shifts in technology, society, and our environment that are affecting human development, and an understanding of which is critical to shaping long-term investment decisions. The topic for today's webinar is biodiversity, or more specifically, the importance of the natural environment to our economic prosperity and how the financial industry can play a critical role in the preservation and regeneration of biodiversity. Our principal speaker today, who will frame this subject in the first section of the webinar, is Beatrice Crona. Beatrice is a professor at the Stockholm Resilience Centre, the SRC, at Stockholm University, one of the leading institutions globally looking at governance and management of socio-ecological systems. Pictet Asset Management has collaborated with the SRC for over a decade now on initiatives such as incorporating the planetary's boundary frameworks into environmental investing, and today we'll be discussing the groundbreaking research initiative, Finance to Revive Biodiversity, FinBio. Pictet Asset Management is a founding member of this 4-year research program, which is hosted by the SRC and brings together some of the world's leading academic institutions and financial sector partners. We're also joined by 2 speakers from Pictet, Steve Freedman, who is Head of Research and Sustainability Thematic Equities at Pictet Asset Management, who has been spearheading Pictet's involvement with the FinBio program. Also joined by Gabriel, Micheli, who is Senior Investment Manager Thematic Equities at Pictet Asset Management. Gabriel co-manages the Global Environmental Opportunity Strategy, where he has been allocating capital using many of the data and principles based on the Planetary Boundaries Framework and drawing expertise from the SRC. So the webinar today is going to consist of 3 sections, each one of which will last roughly 20 minutes, during which time I'll be putting questions to the speakers. I'll also be taking your questions, so please submit them through the portal. And I'll also be asking you to take part in polls, so please look out for those. Okay, so we're going to start now with the first of the 3 sections, which is on taking stock of biodiversity loss and why it matters. And so, Beatrice, I'm going to ask you, please, to start us off, to share some of your pre-prepared remarks, to frame the topic, and to level set for the rest of the discussion. So over to you, Beatrice.
Thank you very much. And I've been invited to help answer the question of why we should care about biodiversity. And first of all, about 1 million species are currently threatened with extinction on land and in water. And you could argue that diversity of life in its own right deserves protection. But biodiversity is also important because it upholds our economies and our well-being. And the IPBES, which is the equivalent of the IPCC for biodiversity, they outline 3 ways in which nature contributes to people: materials and assistance, regulation of environmental processes, and non-material contributions. Now, since the 70s, production of bioenergy, food, fiber, feed, all kinds of materials have increased, and in fact, crop value has tripled. But agriculture, forestry, bioenergy production, fisheries, all of this, none of it would exist if it were not for a number of supporting environmental processes, which we often refer to as ecosystem services. And these are things like pollination, regulation of pests, water quality, and so on. But incidentally, nearly 80% of these regulating services that nature contributes to humans have actually declined. Now, as an example, in Germany, there's been more than a 75% decline in total flying insect biomass over the last 30 years. And this has been referred to as the windshield phenomenon, because nowadays insect carcasses like you see on the windscreen here are no longer a problem when you drive through Europe in the summer. And this is worrying because over 75% of the global food crop types, and that includes fruits and vegetables and some of the most important cash crops we have like coffee and cocoa, they rely on insect pollination. And IPBES again estimates that between the 230 to 570 billion US dollars in annual global crop output is at risk as a result of this kind of pollinator loss. But, you know, do you really need that many different species? I mean, what's the problem with just having a few high-performing species in a system, or, you know, even similar ecosystems across the entire region, for example? because after all, I know that retaining diversity can seem inefficient and costly. But here's why. Most agricultural industrial scale cropping systems we have today rely on one or only a few species. And these are referred to often by us as monocultures. They're highly susceptible to pest outbreaks, to drought and kinds of disturbances. And we've seen this time and time again. Now, one concrete example of the effects of monocultures is the Swedish Forestry, which is dominated by spruce or pine. Now, the problem is that both of these are vulnerable to and susceptible to various stressors, particularly under a changing climate. Spruce is vulnerable to storms and droughts. It burns easily, and it is also susceptible to bark beetle infestations, particularly when it's stressed. Pine, on the other hand, is much more fire resistant, but it's susceptible to moose grazing, which is one of the reasons large-scale forestry in Sweden has moved away from it towards monocultures of spruce. We can compare that to hardwood like birch, which burns much less easily, but it is somewhat susceptible to drought. Now, I'm not giving you this because I think you're desperately interested in details about trees, but to illustrate a key point, that species have different tolerances to different kinds of disturbances, and to uphold the function of delivering a particular service from the ecosystems, like in this case timber or pulp, we need redundancy. And that is like an insurance policy. When one species or ecosystem is negatively affected by a disturbance, another one can step in and still maintain the relevant function. And it's for the same reason that investors, I know, diversify risk through a broad set of investments to ensure that you have financial returns now and in the future. Maintaining biodiversity is a risk management strategy for an uncertain future. So before I stop these introductory remarks, I just wanted to make one final point about the tight connection between biodiversity and climate change. I'm sure you've heard talked to or referred about the biodiversity climate nexus. And so I want to give you an example, concrete example of what that can be. And I'll use the Amazon, which I think is an iconic system that most people should be familiar with. Now, all forests store large amounts of carbon in their biomass, and the Amazon has historically been a large carbon sink. Now, this function is largely upheld by the diversity of plants and animals that live there. And you break this web of life, you start to affect the capacity of the Amazon to store carbon. But the Amazon is also a rainforest, so it needs a lot of rain. And it happens so that it produces about 50% of that rain itself because the trees breathe. We call it evapotranspiration. But of course, as we cut down the trees, this affects the biodiversity and the capacity of the Amazon to store carbon in the long run. And also, in the case of the Amazon, it loses the capacity to recycle the moisture that it needs, and it dries out, and it starts to actually tip into something completely different, which is a savanna. Savanna is an entirely different ecosystem, that it's much drier, completely different biodiversity, much less biodiversity rich, burns much more frequently, and most importantly, it stores much less carbon. Now, it also has regional effects. So effects on regional rainfall patterns, affecting the potential for rain-fed agriculture all the way through the South American region, even as far away as the Central Africa. So here's, to me, a clear example of how biodiversity, land cover, moisture recycling, which is water here, and climate are actually interconnected. And I hope that from this, it'll be clear that biodiversity is actually directly linked to our ability to halt and deal with climate change as well as in its own right. Thank you.
On that last point you made, which is that the topics of climate change and biodiversity are inextricably linked. So why is it, do you think, that we generally only really focus on carbon emissions when listening to you, biodiversity sounds like it's an important, as important in itself, plus it's actually instrumental to solving climate change?
It's a good question, and I think it simply stems from the fact that it seems in some ways quite easy. You step out of your house, you see nature, nature's there, you can touch it, you can feel it. But I think from a policy perspective and from decision makers, it's much more complex and difficult to see directly how that nature actually supports ecosystem services on which we depend and on which businesses depend. And so I think the knowledge about that complex causal connection is much less well established in society at large and in the business and financial realm.
And maybe another follow-up question about the what you were talking about as monocultures, which is, I think we would all accept that we make the environment more susceptible or less anti-fragile, if you like, when we introduce monocultures. But how do we cope with rising populations and the need to feed billions of people, more, the billions of people that will, or the growth in population that will come over the next few years?
So I think there are those that would say that there's not enough food to feed a growing world. I think what science tells us at the moment is that it's feasible to feed potentially up to 10 billion people. The Eat Lancet Commission that came out in 2019 showed that you can actually feed both healthy and sustainable diets to 10 billion people. And so I think the science would say that that's not the issue. The issue is how we do it, what we grow, where, how we grow it, what kinds of practices we use, how we use technology and precision agriculture and so on, and how we use the scarce resources. But of course, no one can say for sure, but I think the science shows that we can do it without these potentially highly vulnerable monocultures as well. But I think to some degree, we probably will need to use monocultures, and we certainly do need industrial scale cropping systems. I'm not challenging that, but there are ways that we can do things much better.
Great. And I've just got one more follow-up question, and then we're going to open up to the first poll. So maybe we can even open the poll now to have it ready. And that's the question of, there are so many species that have still to be identified, right? So there's, I read a statistic, I can't remember it, but it's, there's still hundreds of thousands of species that we don't know exist, right? So how do we also balance that? The fact that, the species we know exist are diminishing or becoming extinct, but there are also lots and lots of species that we don't know about yet or haven't discovered and aren't using in production.
Well, so I mean, back to the sort of insurance, if we look at medical discoveries, many of our medicines do still stem from compounds that come from species that we find both on land and in water. And so you could say that there's a huge opportunity cost. If we exploit our ecosystems to the point where we basically destroy these species, that could be potentially the next solutions to a lot of our problems, a lot of medical problems. I'm sure that's not news. We've heard that kind of argument before, but it's still true. And so that, I think, is a resource bank that we don't even know the value and capacity of that. But if we make it extinct, we will never be able to benefit from it.
Okay, thank you very much. So we're going to open up for our first poll here. And the first poll is about whether we believe that the financial industry is taking this topic of biodiversity as seriously as it should be. So I will invite everybody to please complete that poll, and then in the next section we'll invite the panelists to comment on the results. Okay, so they're coming in. Okay, so I don't know if the panelists can see that, but there's a pretty strong consensus there that 64% of people believe that this topic is not being taken seriously enough yet, but awareness is growing and is beginning to be baked into financial decisions. So only 4%, it's slightly moving, right? But very much a minority of people think that it's being taken seriously enough, and most people believe it's only now starting to appear on the radar of investors. So I think that frames nicely the next section. So Gabriel, I'm going to come to you for the first question in the next section, if I may, which is based on the ecosystem services which Beatrice talked about in her presentation. What have been the attempts so far to put a value on biodiversity, and what are the kinds of risks that companies, either individually or in aggregate, face as biodiversity is lost? And I guess on the flip side, what are the opportunities for the companies that are preventing biodiversity loss and or restoring biodiversity?
Yes, so on the first question, on the value of biodiversity, there are many attempts, and we saw before on the slides the range of the value that we attribute to biodiversity and ecosystem services is very wide. So it's difficult to give a number that is very clear. There are some attempts, like World Economic Forum mentions that about half of the global economy is dependent on nature and its services. So it's a very large amount. Boston Consulting Group came up with a number of that the value of nature would be around 150 trillion, which is about twice the size of the yearly global GDP. So it's quite a large number. And the World Bank also came with some estimates. For example, if we are on the path that we're now and we lose, for example, pollination, timber, or fisheries, then we could lose about 2.3% of GDP by 2030. And that's much smaller in high-income countries, but it can be up to 10% in some low-income countries. So but it's very clear that it's very important for the economy, and it's very probably a very large number that we underestimate. What I would add is there is kind of an intrinsic value of nature that is very difficult to measure. So it's kind of a cultural value, or the price just for nature for being there, and the price that we can give is usually on the extraction, the use of all this. But I think we have to probably look also beyond that and acknowledge that there is a large part of the value that we can't really measure. Then the risk for the company is its ability, manifold. It can be, come from, you have, the water storage. We have these, very warm summers that we just had, and even Switzerland, where we have a lot of water. Then we had to start to be careful then. And if you lose biodiversity, you lose the ability of soil to capture the water, to keep it and to store it, and then feed it back to the stream slowly. Then that's obviously a big issue. You can say a utility company doesn't have enough water for a nuclear plant or something like this, and that's obviously a big issue. Obviously, for all the food sector, it's always a big problem with potentially with pollination, soil fertility, the quality of the soil is obviously different. So all of those of those nature services do provide something that is potentially a problem for companies, and I think that's probably, we saw in the polls before, people don't look at it yet. It's kind of taken for granted, but it will become clearer that it's an issue, and companies will start reporting also on it. So it's quite important. And finally, there are opportunities, because you talk about doing a business that we could call regenerative would be to produce something and at the same time have a positive impact on biodiversity. And I could give some examples, and I think consumer preferences are really going in that direction. And it's probably a big differentiator if you're a brand and you say, we are producing shoes, or something made of, would look like plastic, but actually comes from plastic that was captured from the ocean, and you use it to make this product. So that's a strong selling argument. Probably maybe today it's more, people want to have it, but it might come into regulation later on. Another big topic is regenerative agriculture. Today, to cultivate, we saw this monoculture, and there's not much life, in those culture. You could actually improve it a lot. And we also, we heard about capturing carbon into the soil. You can actually produce food while capturing carbon, improving the quality of the soil and of the food. So it's good for your health. It's good for the planet. It's good for nature, everything. And there starts to be some labels like organic, regenerative, that goes beyond organic, and start to take into account a nature positive impact. And there are some IPOs or companies talking about it, or already have quite advanced business models on that. And we are really looking forward to potentially provide capitals for these companies to grow in the future.
Great, thank you very much. That's a very comprehensive answer. So I'm going to come next to you, Steve, if that's okay. So a clear majority of our audience doesn't think that the risks are around biodiversity are yet being fully taken into account. And I guess one of the questions is, how does an investor understand the different types of risks? So I think there are probably two different types, right? There's materiality and externality, which pop up most often in this debate. And can you explain the difference between those two different types of risk?
Sure. I think it's really within the broader investment community and the ESG and responsible investment community in particular, you tend to have some investment approaches that are really just focused on risk from ESG factors. So it's basically about just being very mindful of all of these aspects and how they ultimately can influence the investments. So ultimately affect the companies, affect the shareholders, the bondholders, etc. So that's where the materiality concept comes in, which is basically, is a particular ESG topic, such as biodiversity, does it actually matter over some relevant time horizon? And that is in contrast with investors that have more of a double bottom line focus. So they want to be mindful of these externalities that are affecting other stakeholders, even if it's not clear that this will necessarily have an impact on the company over a relevant time horizon. And so what we're starting to see is that biodiversity is beginning to shift from being more of an aspect that's relevant for these double bottom line oriented investors, and is starting to become material even if you have this narrower focus on the shareholder. It's happening, it's basically the same playbook that we've seen with climate, where 10 years ago, climate related factors were hardly material, they were hardly being priced in to company valuations. Biodiversity feels, this is completely subjective, but it feels like it's 5 or 6 years behind that transition. But what it does mean is that if we follow this trajectory that we have on climate and carbon, that increasingly how a company is impacting biodiversity around it is actually going to matter because of regulations kicking in. We're starting to see that with some countries such as France taking a leadership role there, but also in terms of other stakeholders having, putting more pressure on companies, whether it's employees, whether it's consumers, whether it's financiers. So that's the shifting aspect here, and I think we can predict with relatively large confidence that biodiversity will matter a lot more in 5 years' time than it matters today. So basically, what this suggests is that today is the time to be investing in methodologies and frameworks that allow us to factor these aspects in, even if we're taking a narrow view. But of course, we're seeing more and more investors that want this double bottom line, and for them it matters today already because they just have this expanded view of objectives for their investments.
Fantastic. Okay, so we started to get some questions coming in, so thank you very much to everybody who's submitting a question. I'm just going to ask one more question to Beatrice, and then I'm going to start to open up to your questions, which are excellent, so thank you. So, Beatrice, you wrote a paper. It was called The Anthropocene Reality of Financial Risk. And in that paper, you talked about the cognitive disconnect that exists between environmental and social, environmental and financial risk, and the externalities and materials that Steve talked about. And I want to ask, how sufficiently do you think the current ESG rating system accounts for externalities, and where do you see the challenges of some of the frameworks like ESG?
Yes, so I guess I would say that by and large, the current ESG does not really capture externalities at all. If by externalities we are referring to the unpriced impacts that are not in some way directly connected to risks to a company, like Steve was saying. When it comes to challenges, I would say there are three. I mean, there are probably more, but I would raise three interconnected challenges. And the first one is that ESG was a tool that was not designed to capture impact. It's rather to capture risk to companies, which we also heard about in much the same way that the TCFD does. However, and this is the second challenge, as climate has risen on the agenda, I think ESG raters started to include what I will refer to as impact-related type of metrics, like carbon intensity, for example. And in doing so, they started to cage these rating tools also at sustainability metrics, and as far as I'm concerned, kind of blurring the lines between what actually, or metrics that can actually capture how sustainable an investment is in the long run, and ESG, which, as I said, is kind of premised on financial or singular materiality. And so the third challenge, I would say, refer to this as impact-related variables, and I'm a bit hesitant to call them impact variables, and the reason for that is that intensity measures are inherently relative. It only captures how efficient a company is in using a resource, water, or emitting in relation to some economic output. And that is actually what we need to be assessing is more in the aggregate absolute terms. How much carbon is being emitted, how much forests are being deforested, how much water is being taken out of a water scarce area, because that's what's going to help us actually see how far away from or close to a planetary boundary we are. And so just to finish off, I looked at the Morningstar or Sustainalytics variables that are these principal adverse impact variables that they put out last year. And out of well over 100 of these impact variables, a handful literally are actually looking at what I would then call absolute sort of impact metrics. The rest of them are all more or less intensity type of variables.
Thank you very much. Okay, so we're going to take the first of our audience questions here. So, Steve, I'm going to come to you for this one. So the question is, people unfortunately take decisions and invest mainly if there is a financial return in sight. How can you link biodiversity loss to investments in order to invert the trend?
I think that this is really something which is going to be increasingly easy as regulatory frameworks and all of these stakeholder expectations start prioritizing biodiversity. Yeah, that points, if again taking the climate path that we've seen over the last decades as an example, companies that are mindful of their biodiversity impacts, typically negative, or possibly even try to develop business models that are regenerative, as Gabriel was mentioning, increasingly will benefit from better market performance. So this is something which I think we're starting to see now. It's maybe not the most potent incentive at the moment, but I think things are shifting quite fast. Really, just in the last 3 years, the surge in interest and conversation in investor circles among companies in policy-making circles has been really quite remarkable. I think this has been gone from being just a topic discussed in academia to being, even if not fully understood, it's complicated, but the awareness that we need to do more has grown quite significantly. So I think, to answer this question, that this is the framework around us is shifting quite quickly, and even just with the focus on even near-term performance, I think the stars are beginning to align in that direction.
Great, thank you very much. And then there's another one here. I'm going to put this one to you, Beatrice, if that's okay. So I think it's about sort of unintended consequences of some of the actions we take, right? The question here is, what role do you think a more plant-based diet plays in tackling food availability? Isn't the big problem that the animals we eat, as they are the middleman that consumes many resources, grains and water to produce meat for humans? And are we destroying forests, plant more soy, etc., to feed animals?
So that's a great question. And I was one of the researchers that contributed to this blatant self-promotion. But again, the Eat-Lancet Commission, which I referred to earlier, was one of the sort of first really high-profile scientific assessments of the possibility of feeding, as I said, 10 billion people by 2050. And we see that it is possible, as I also said, but only if we move towards a nearly plant-based diet, for the reason that this person also raises, that we are currently, animal protein is an inefficient, if you will, way of producing food for humans. It leaves an unnecessarily large footprint, particularly red and ruminant meat. But the Eat-Lancet concludes that we don't have to become complete vegans. There is a room for dairy and poultry and some red meat, but in much, much smaller quantities than we are eating today. So I guess that's my answer is that, yes, we have to become almost vegetarians, but not entirely. And then if we can all, as a global community, contend to that switch, then I think we would be on a viable trajectory. And
may I ask a follow-up one, which is about the risks that are less apparent today? So I think mostly we've been talking about sort of known risks. What are the kind of, sound a bit like Donna Rumsfeld, what are the kind of unknown unknowns that might result as feedback loops from destruction of natural resources materialize?
Okay, so I will also do a Rumsfeld and then say, like, we have another box there, which is the known unknowns. And I would say that what was previously conceived as like 10, 15 years ago talked about as known and unknown unknowns, I would say that at least the scientific community, particularly the Earth systems and climate community, have now shifted into the known unknowns. I think we can say with a fair amount of certainty that we will see systemic risks, cascading effects of multiple failures in ecosystems, or these kinds of regime shifts, which is what I tried to exemplify with the Amazon switching into a savanna, and or rapid loss of certain services like pollination. We will see it, and I think we have high certainty that it will happen. The question is when, exactly where, and triggered by what. But these things are also being compounded by fast sort of happening climate change as well. So I guess that's my take-home point. Unknown unknowns, of course, we can't say anything about, but many of them that were previously in that box are now becoming known unknowns.
And then, sorry to get, I've got one more follow-up for you, because it's another question that's come from the audience, which seems pertinent. Is it enough for the world to protect the natural resources it has? Because I think mostly we've been talking about, stopping the rate of decline, or do we need to restore at least some of what has been lost during the last 50 years?
So this, I will use the term resilience, which is, I'm at the Stockholm Resilience Center, so I'm allowed to use that term. But we use it as a means to kind of assess, you could say, robustness of an ecosystem or any system really to perturbations and shocks. And as I tried to show in my slides earlier, biodiversity and nature in general has a fantastic absorption capacity for all kinds of stressors and shocks. But the more we diminish the diversity and the functional redundancy that I spoke about, the more brittle these systems become. And so in answer to the question, I think if we only focus our efforts at reducing the negative, we still have a long way to go. We'll still be destroying stuff until we're down to zero destruction. So we can't only focus on minimizing harm or reducing harm, as the taxonomy would say. We also have to focus on the other side, which is boosting the resilience of the ecosystems and what I would call do good as investors as well. And that, to me, that represents both focusing on how can you, select your investments, allocate capital to those companies that are doing the least harm or are trying to minimize their harm, and engage with them in ways to minimize that, while at the same time looking at where are investment opportunities in the companies that are doing the good. So I guess the question posed here is, yes, I think we do have to also start to increase and not just preserve what's there now, but actually increase biodiversity as much as we can in sort of nature-based solutions.
Great, thank you very much indeed. Gabriel, I'm going to come to you because I have a question about data and measurement. So we heard there that we should be, not considering just the rate of decline, but we should consider how we actually boost biodiversity. And then I suppose the question is, from your point of view as an allocator of investments, of investment money, what are the sort of measurement methodologies that are missing, and what's the missing data sets that would help you to better incorporate biodiversity risks and opportunities into an investment process?
Well, that's the big question. I mean, we need to understand biodiversity better, and we know there are different dimensions: diversity of genes, diversity of species, diversity of ecosystem, and they are kind of all interrelated. And there are quite a few measurement systems that are there. We have our own, that we have built along the planetary boundary framework. Biodiversity is one of the dimensions that we look at in our investments. We have done that for now more than 8 years, and we look at the impact on the whole value chain. For us, it's not just what the company is doing in its own operations that matters, but it's really all the product that it has used, that have been sourced, and then transformed into something else, and then the use of the product. So we really look from cradle to grave to try to understand it. Our estimate is probably relatively rough today, and what we'll need much more is to have, some kind of geolocalization or understanding of all these companies and all these value chains where things were actually made and how they were done. And that's an enormous undertaking, obviously. Blockchain technology could help, or you have lots of data that could come from satellites, could come from lots of different local measurements also. And probably we'll need a metric that integrates as much as possible to try to understand the impact on biodiversity. But it's not really there, I would say. Something that could help us doing it, and a lot of research has to be done on it, and it has to improve so that we can allocate our capital better. But we have a relatively good idea of which are the sectors, where it's intensive in resources and that cause damage to biodiversity, and which are the ones that are not. And so far, we see that the ones that damage less biodiversity just outperform the others.
Fantastic, thank you very much. Okay, so we're going to move into the third section, which is on how finance can play a role in arresting damage and fostering a regenerative economy. And what we're going to do is a slight change here, which is we're going to actually run the poll at the start of this section so we can comment on the results as we go through the pre-prepared questions and the questions we'll get from the audience. So could I ask everybody please to take part in the second survey, which is on can the finance industry make a major impact in fostering a regenerative economy? And the options are yes, it can and it should. Yes, it can, but governments and other actors need to take the lead. No, finance lacks the measurement tools and the right incentives. Or no, it is the role of governments and other industries to tackle this problem. Okay, so the results are coming in. Okay, the consensus forming, but the consensus seems to be that this is, it would be difficult to have this discussion if this were not the case, right? But people feel that finance should be playing an active role, and either it can and it should, or it can, but governments and other actors need to take the leads. Very few people think that finance should not be actively involved in this topic. So, Beatrice, I'm going to ask you the first question in this section, which is why is it so important to bring together diverse actors? How can this program help us to unwind the negative relationship between human prosperity and economic development on the one hand and nature on the other?
Well, I think it's really important because we are not the scientific and natural science and sustainability community and the financial community, we're not two communities that tend to historically have had a lot of interaction. And I think that it's quite clear that the changes that need to happen are large. So it needs to happen fast, and it needs to happen at scale. And I think now is a very opportune moment and a necessary moment for these two communities to really start to talk to each other. And that's what this program is trying to do. And I think as a scientific community, we really need to do our best to transfer some of our state-of-the-art knowledge and try to make it palatable and, I guess, easily digestible to your community, and raise awareness of the importance of the issue, which we see it's already beginning to happen. But to also, I see, like, avoid what I would call almost like a potential capture of the sustainable investment movement. And what I mean by that is just that I see, as from my perspective where I'm sitting, a slightly concerning trend that, for example, in conventional financial accounting bodies are now moving in rapidly to also devise sustainability standards for investments. And given what we know about the sort of confusion around sustainability and ESG and risk, the confusion between double and single materiality that has played out in that domain, it concerns me a bit, since the scientific community has not been invited to sit around the table and discuss those kind of sustainability accounting standards. And I think that for us at SRC and for this consortium of scientists, partnering directly with the in scientific co-production with engaged actors like Pictet and some of the other financial market actors that we have with us. I hope that that can sort of bridge the divide that we're seeing and avoid some of this, hopefully, what I will term misconceptions about sustainability and impact metrics and what needs to be done.
Great, thank you very much. So, Steve, I'm going to ask you a follow-up question about the FinBio program, which is recognizing the importance of the financial industry and acknowledging the gaps that need filling in data, for example. What does it mean for Pictet to be part of the FinBio program as a founding partner? And what do you expect the FinBio program to deliver for you and your clients?
Well, I think, one of the key observations we have with the years of experience we have in sustainable, responsible ESG type investing is that this is a multidisciplinary approach that is needed. We know the economics, the financial side of things, but this only works if you have a very deep understanding of the environmental and social factors that you're trying to take into account. And so for us, it's clear, and this has been the approach. Gabriel talked about the partnerships we've had over the last decade. We need to be close to the source of generation of insights. In this biodiversity area, I think it was alluded to, which is really a lot more complex than the climate debate. Climate is a big challenge to get things moving, but it's actually a relatively simple phenomenon to understand relative to biodiversity, which has so many different factors bearing on it. So for us, this is an opportunity really going in two directions. First, for us to be helping to make such research happen, but being really close to the insight generation so that we can be relatively rapid to translate those insights into how we feel this should be incorporated in an investment process. At the same time, we also think it's important to be able to provide feedback into the process, because the idea ultimately is that the research should be impactful. It shouldn't be done in a way that is disconnected with the implementation realities. It should be something that ultimately financial sector can use more widely than just the direct partners in this consortium. So we feel that two-way communication is very valuable. It's something which we see as a critical way also for us to learn about these topics as an organization, to be force-fed this type of insights, but also to contribute more in terms of the overall ecosystem, to use that term, financial ecosystem, to the spreading of this knowledge.
Thank you. Gabriel, one for you. So in the environmental opportunity strategy that you co-manage, the negative impact of the companies you invest in on biodiversity loss has been materially and immeasurably lower. Do you think this kind of indirect influence through ownership can be significant? And how, I guess it's a slight duplication of the question we had earlier on, but we should use, if you can answer it as well, that'd be great to get your view on it, which is, how do we get more asset owners to take account of biodiversity related impacts?
Yeah, so I think it is, we can have an impact. I mean, that's our goal through different ways, actually. Our goal is to link, the environmental impact with the financial performance, and we think the two go in the same direction. There are different ways for us. We invest, in equities, so we buy shares from a company, and usually a small amount of these shares. So you could wonder, how much impact do we have on the management or what we have? There are probably at least 4 impacts that we can see. The first one would be that we own the stock, so it kind of lowers the cost of capital marginally, at least for these companies, and for them, they have a higher stock price, for example. So others that don't have such a good biodiversity footprint see that, and then they want to emulate it, and they understand that the market is going there. That's quite important. Then we provide capital to companies. Usually we buy stocks, on the secondary markets, stocks that are already there, but sometimes it's primary stock, and that's something a company uses for their growth. So if we talked about plant-based food, we participated in some IPOs in this space, where we provided the capital to companies that actually will have a clear material impact on biodiversity. Then we engage with companies And that's quite important, and more companies are asking also for advice. So we think we can really partner with them. First on understanding what is their biodiversity footprint, and telling them they need to measure it, they need to report on it. That's that is very important. Then once they understand that, they can actually change or transform their value chain to actually have less impact. And that is something that is that is very important too. And then we think, as was said before, we think they should actually go beyond that, and through their operations, through the system, they have a lot of land, they have a lot of operations, and they could actually start to do biodiversity positive projects in these places, and that could have another impact. And then we talk about the subject all the time to companies. We talk with our clients, so we think we have a role to talk about biodiversity, say that it is important, and the more people hear about it, the more they will be aware of what it is. And we do that, how can we get other asset owners? We have, obviously we have our clients, we talk to them, we talk about the issues. And then we're also on some groups, of investors where we discuss biodiversity, and we discuss, the metrics, how it should be done, or we're in different working groups there. So we hope, the whole industry, we kind of move together forward to take into account the issues.
Great, thank you very much. So we've got a question here about passive investment, right? So there's been a strong trend, as we know, generally speaking, towards more and more assets being passively managed. But it would seem that active investment engagement in this area is critical if we're going to address this issue of biodiversity. So Steve, what's your take on that, the importance of active investment?
So I mean, one distinction we need to make is the distinction between active management and active ownership. They're not the same. So in principle, you can invest in a purely passive manner and still engage with companies. Having said that, in reality, effective engagement works when you know the companies well. And so with portfolios that are more active, that are more concentrated, a lot of our thematic portfolios typically have around 50 stocks, give or take. That makes it much easier to have a constructive dialogue because you're often a long-term shareholder, the relationships that are built, and because you really know the details of the company. So I do think that, as Gabriel was referring to, active ownership is one of the most powerful levers we have to actually induce change as investors. It's something that many investors can do even before they have a fully fledged out biodiversity approach. You don't need to have all of the answers. You need to know what the questions are and basically use the access you have to company managements to be able to essentially prioritize the topic, provide the signal that this is an important thing and that there's an expectation that companies will be taking it more seriously in terms of reporting, in terms of policies, etc. So again, active ownership is key. Active management is, in our view, a more likely way that you can be effective at active ownership. But of course, these other channels of impact that Gabriel was mentioning also matter in the aggregate.
Thank you very much. Beatrice, I'm going to come to you next to try to gauge your level of optimism about the future. So we've got an upcoming UN Biodiversity Summit taking place in Montreal, and there's a big hope that will deliver a Paris-style accord for biodiversity. There's also a lot of work happening from the Task Force for Nature-Related Disclosures or Finance for Diversity Pledge. How positive are you personally about the future? And can the work of FinBio and other initiatives have a significant impact soon enough to tackle this problem?
Right, so I am cautiously optimistic about the COP15 in Montreal because, I mean, it's been downscaled, it's been postponed, as we all know, multiple times. Supposed to happen in Kunming, now it's in Montreal. It's hard for me to say, but of course, like everyone, I'm hoping for a strong and meaningful sort of consensus statement coming out of that conference of the parties, because I think that will set a really strong signal for everyone, including investors, to go forth. But yeah, I don't know. The TNFD, I think, is a really good initiative. And as a knowledge partner, I get to see beta drafts before they get put out to the public. And I do have some concerns with the current version, but I'm at the same time very happy to see that it explicitly builds on what Steve was referring to as this double materiality, and it addresses impacts and not just dependencies. So to me, that's a big step forward, and it sets it apart from the TCFD. And I think it remains to be seen what the TNFD and the Finance for Biodiversity Pledge and these kinds of initiatives, what they can do in terms of impact at scale and at speed. It's heartening to see that just the interest is booming, and we're seeing a lot of activity in this space. So for me, that's a positive signal. I think Gabriel was mentioning too, we still lack, and that's totally true, we still do lack a lot of the sort of nitty-gritty tools of capturing biodiversity and in a meaningful way, because it can be so many different things and it can matter in so many different ways. And those tools, they're just not there. And then it's just very hard and complex to translate biodiversity into something that's quick and easy to capture, and therefore, that you can use in your equity portfolios to screen companies in and out. But it'll take us a few years to start to move in that direction. And whether FinBio can deliver that, quickly, I don't know. We'll do our best. And I think everyone in this investment space related to biodiversity, I think, has to realize that this is going to be an iterative process. It won't be, and in anyone, I would say, who says they can come up with the biodiversity measure for you and it's there on the market and ready to go, I think anyone should be very, very cautious with that, because that's not how it's going to happen. It's going to have to be iterative and improved as we go along and understand more. But I just want to say one final thing, and that's that, of course, as well, lots of interest in the topic, that's great, but also given the speed at which this is moving in your field, and I was mentioning it earlier about the accounting bodies are moving in as well, I do also see a risk, of course, of unintended sort of greenwashing, because there's such a hunger for these kinds of tools, and we do see already at least a handful of actors developing and marketing by quantitative biodiversity metrics. And I have to say I'm a little bit skeptical about some of them. And so there's a real risk of unintended greenwashing, which I refer to as green wishing, because we are so keen to allocate big lumps of a capital into this domain.
And then just to go back on that, the first part of that question, which was around a Paris-style global agreement, do you think coming out of Montreal we will get firm commitments on biodiversity, or is it, or as you say, it's just even difficult to arrive at those because measuring those in the first place is a tricky thing?
I think we've seen historically that like with the HE targets, hard to arrive at strong targets, and when they were arrived up, we have not, as a community, a global community, we have not lived up to those at all. And I think it's in part because it's been very difficult to translate them into metrics, and metrics, we know that what gets measured get worked on and done. Biodiversity has been hard, and it had to sort of been pushed aside a bit because of the climate being easier maybe to grasp with. So yeah, I don't know what to say. I'm hoping for something good. I don't know, but I think we have to remain optimistic and then wait to see what comes out in December.
Great, thank you. And then Steve and Gabriel, I just wanted to follow up on that, what Beatrice was saying around the measurement challenges here. I mean, you as investment managers, what sorts of extra disclosures would you like to see, or is it even a question of disclosures in the first place? Because listening, it sounds like there is lots of data, but maybe it's not the right data. So is it disclosures? Is it how do you get the data to be able to incorporate the risks into your investment decisions?
Yeah,
sorry, Steve, come to you first.
Again, I reiterate what Gabriel is saying, which is really, it's really not trivial to fully understand a company's geographic footprints in terms of its full value chain, and even its production sites with respect to the main sources of biodiversity impacts. And so this is something where, I think new tools are emerging, new databases, but ultimately those will only take us that far, and we will be over time relying on companies providing us sort of the additional contextual information that helps us interpret some of that data, which is going to be quickly very digitalized. And initiatives like the TNFD, which are really just the beginning in the process of having more disclosure. They do have, at this stage, a still relatively qualitative approach, but it's a step in basically being able to start a conversation where, as companies get more educated, investors get more educated, the whole debate on biodiversity and its impacts is happening at a much higher level of understanding. So I think that's a little bit the direction of the journey we're on.
Gabriel, anything you would add to that?
Well, right now any data is better than nothing, So
Yeah.
all the even crude data is already better. Some indicators we have is already something. But I think we need, as Beatrice was saying, we actually need the scientists to tell us what are the true metrics, what should be, the best indicator possible. Kind of have that in mind, and then over time we'll have, different prototypes or different calculation through different iteration that will get us to the, maybe the final score, or understanding of what is biodiversity for companies. So we have to know what's the best way to do it. Then we have to see what's available, what's the data, and both, over time have to kind of converge. And we'll be happy to be part of that journey.
So we've had another question here from the audience. I'm going to put this one to you, Steve. So this was the topic of the last Megatrends webinar, which is green bonds. And the question is, have green bonds played a role yet in biodiversity?
Well, that's a tricky question to throw to an equity investor. So I sort of feel like passing. I'll just answer this more in personal capacity. I think green bonds, the way they're structured today, are not typically really financing green projects directly, because they're really just the use of proceeds device. It's basically a bit of an earmarking device. And so I think, while it makes it easier for issuers who are investing in green projects to perhaps get access to financing, you're not directly financing the project that is behind it, right? So I think in terms of causality, so if you're looking to align your preferences as a bond investor, green bonds are I think an effective way to do it. If you're actually looking for deep impact, there are probably other instruments that have more of that impact out there.
Thank you. And then, Gabriel, one for you, if you don't mind, which is, you might not want to ask the second part of this question directly, but anyway, what would a biodiversity investment product look like, and how will you tempt me to invest?
What would it look like? Well, today, we find some companies that have some products, directly with a clear contribution to a positive biodiversity. There are some of them, but it's relatively rare, and it's a small group of them. So usually it's more indirectly. Something like a circular economy, helps you to reduce the consumption of resources, and 90% of biodiversity loss comes from the extraction of resources. So if you can actually limit that with a circular economy, or lots of indirect ways, to limit or to improve efficiency, to do more, we are doing damage, but we should do more with what we have. And then slowly we'll find companies that actually have a positive impact. And we are actually working on a strategy like this that is going to be launched very, very soon. So stay tuned if you're interested in that, because you will see the results very shortly.
Great. And this feels nice and symmetrical. So we started with Beatrice, and we're going to finish with Beatrice. So Beatrice, I've had a question. It's again about plant-based diets, but I think what might be good is if you approach this slightly more universally, right? Which is, it's a question about, I think, more about how we internalize externalities. And the question is the fact that we need to move to a wholesale plant-based diet to improve? It's a fact that we need to move to a wholesale or on a wholesale basis to a plant-based diet. How do we do that? Is it through punitive taxes on industrialized meat production? So I guess it's a broader question, which is, how do we internalize those externalities and start to get consumers to behave in a way that's good for biodiversity?
Wow. Okay. So that's also, I'm not a behavioral economist, and I'm not a macroeconomist who understands necessarily the ins and outs of fiscal instruments like tax or whatnot. But I think there's multiple shifting. I think one thing that I can say, having worked with food-related issues and lots of different diverse colleagues for a number of years, is that it's tricky to get people to eat new things. It's probably one of the things that are most entrenched, also in our cultures, how we eat. So from that point of view, it's going to have to require probably a whole range of things. Certainly taxes for the way that we've used sin taxes or sugar taxes that we've seen have worked. Certainly that has a role to play. There's been various studies recently looking at that in different countries. But I don't think tax is the only way. I think a lot of it has to do with, availability of easy and accessible and affordable alternatives. And for that, you need new companies, new products that actually, support that. But we also can see that this is not only about the primary producers. The food industry is, I think, particular in that way that, the retailers are gatekeepers to consumers, and they have to be on board. And I think as investors, it's really important that you push the retailers as well, because they play a fundamentally crucial role in what they also roll out and make available, what drives they have. And the fact that most retailers still today are using red meat rebate or, sales as a way to lure customers into the shops. That's a fact. And so they have a big role to play in how they shift and how they product place and the likes. So I think engagement with those kinds of companies in your portfolio as well is going to have to be part of it. So what am I saying here? Taxes, yes, a role to play. I think a lot of the big retailers have a massive role to play, because ultimately as consumers, we are very much a captive audience. And that's also a fact. It's just, you can look at the US where we have entire food deserts. People are captured by what is on offer and what they can afford. So I'm not sure that was a super succinct answer, but it is a tricky thing. And then of course, it's going to take time, because it's culture, and cultural variables change fairly slowly still.
Yeah, I think that's one of the takeaways, that this is a very complex area, but at least now we are getting it onto the public consciousness. But anyway, unfortunately, we've run out of time. So I just want to finish by thanking everybody. So as you would have seen, most of the questions came from our audience. So thank you so much for your active participation, for submitting all of those questions on the portal. I'll just attempt to do a very quick summary. So we covered three things. We covered why biodiversity is such an important topic and why it merits as much attention as carbon emissions. We explained why investors need to take account of biodiversity in their investment decisions. And lastly, we discussed how and why finance can play an important role in fostering a regenerative economy, as well as some of the obstacles that will need to be overcome if it is to do so. I'd like to thank our three speakers, Steve, Freedman, and Gabriel Micheli, who are here with me in Geneva, and Beatrice Crona, who is in Stockholm. Thank you for your time and your insights. I hope that you, our audience, have found this discussion informative. If you'd like to watch back the webinar, or if you'd like to share it with any of your colleagues, it will be made available next week, and we'll send you the link at that time. And of course, you can speak with your Pictet relationship manager to discuss any of the topics that we've discussed here today. The next Megatrends series webinar is going to be on the 17th of November, where we'll be discussing the future of aviation. So please look out for details of that webinar, which will be announced soon. So thank you very much again, and I hope you'll join the next Megatrends webinar.